Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is David O'Leary. David is manager of fund research at the mutual fund research firm Morningstar Canada. Today we're going to talk about putting gold in your portfolio from the planning point of view. David, if I put gold in my portfolio, is that something I'm going to hold for a little while and then sell, or do I keep it as a permanent part of my portfolio?
I think for most investors, your best bet is to just buy a little bit of it and hold on to it. Speculating on the price movements and timing the entry and exit is a tough game.
Let's say I'm going to put gold in. What percentage would you recommend?
There's no definitive answer on this, but I think we're talking in the sort of 5% ballpark.
Should I mix in the gold bullion and the gold producers, or do I need to just pick one or the other and stick with it?
I think for most people, if you're looking for some sort of hedge for your portfolio, the gold bullion exposure is the way to go. Keep in mind that most investors already have a fair bit of exposure to gold stocks through just Canadian equity investments. Gold,
right, a certain percentage of the Canadian market would be accounted for by gold producers.
It's about 10% right now. So
is that right? Eh?
Yeah.
All right, so you don't really need too much extra in your portfolio.
I wouldn't think so, no.
Now, what if you're a conservative versus aggressive investor? Does that have anything to do with how much gold you should be carrying?
Sure, it would. I mean, if you want to put a little more risk on the table, you could always up that exposure. But again, I think for by and large, for most people, unless you've got a specific call, that you think gold is going to do well, you wouldn't need to have more.
So I can be a conservative, sort of capital preservation-oriented investor, and I would still have gold in my portfolio then?
Of the equity portion, I mean, you'd have a diversified portfolio
right.
of stocks and bonds and cash. Or other assets. But of the equity portion, yeah, a small component.
Because I think there's still a mentality out there that gold is something, a very speculative, maybe people are thinking of junior mining stocks, I don't know, but gold is a speculative, sort of dangerous sort of thing. But you're saying it's actually a portfolio building block that, that should be considered by a broad range of investors.
Yeah, because the price movements of gold don't correlate with, the price movements of stocks or bonds. They move in directions at different times. It can actually reduce the risk in your portfolio if it's added properly.
Great, many thanks, David.
Thanks.